Hi Prashant, am I audible?
Yes, you are audible. Am I audible?
Yeah, you are audible as well.
Great.
Thanks.
Great.
Thanks for joining.
Yeah, thank you.
Okay.
There was some issue in my mobile app, but now it is sorted, I guess.
Okay,
All right.
great. So, guys, people will keep on joining. Let me take the opportunity to introduce our guest for today, and then introduction will take a bit because he has so many stars added to his profile. And so, today we have with us Prashant Shah, who is a CMT, a CFTE, MFTA, MSTA. So basically, he's amongst the one of the few professionals with number of coveted and renowned designations in the industry. He had been awarded CMT and CFTE by CMT Association and IFTA respectively. And this is very proud in the sense like he is the first in India who is holder of the right to the Master of Financial Technical Analysis certification designation given by IFTA for the original research conducted by him on the line break charts, swing trading techniques. He is also a member of MSTA London, and he had written four popular books. The name of the books are as follow. So the first one is Trading the Markets, the Point and Figure Way. The second one is Profitable Trading with Renko Charts. Third one is Outperforming the Market Using Relative Strength and Breadth Analysis. And the fourth one is You, Me, and Trading. And in the past, he had worked with various financial firms and he had been practicing technical analysis over a long period of time, even fundamental analysis, quantitative, relative strength, option strategies, and also noiseless charts in a particular way for a number of years. So, having worked in capital markets for so long, he is connected and exposed to various businesses, research institutions, HNIs, and retail traders. So, and also like Prashant is a founding member and CEO of DefineEdge, and it's basically a fintech company serving more than 1.5 billion subscribers. Uh, yeah, so that was it from my part, Prashant. So, sorry in case I missed anything on your
Yes.
introduction. I would request you to add, and yeah.
No, no, thank you. Thank you for your this introduction. And yeah, so this has been a journey actually. I've done all this. I've got these designations like I've got CMT, CFT. So I've done a lot of work in technical analysis, kind of quantitative, and I worked with fintechs. My startup is kind of fintech, which is also a brokerage firm now. So I've done various things in markets, and along all this, I have been trading the markets, different instruments. So basically, I joined in 2005 as a sales executive in a financial organization, and from there, this journey started. Uh, it was, I mean, back then the markets were not uh, they were very kind of premature stage if I look at it today, and resources were not as accessible as they are today. And so it was, I started by interacting with people, my customers. In a way, I used to open their demat accounts, and from there I got opportunity to interact with a lot of traders, investors who practice different types of market analysis and the methods of trading or investing. And thereon, I mean, I started learning about all this, and I got to know about while because my initial background was I was actually pursuing CA, and my I was doing interns actually. My final attempt was pending, and I had to join a job then. So the background was like I was accountancy, so I used to read balance sheets and ratios of different companies, so business analysis and all that. But then I got to know about technical analysis, and I found it very interesting. I started practicing charts, and I bought, of course, software and all, but I used to maintain charts. I used to plot a lot of indicators in Excel, and uh, option strategies in Excel, and all those things I used to do. Then I got to I was convinced about the importance of technical analysis, and somehow, I mean, a very painful period for me was in 2007, when there was uh, lower circuit due to that P note period. It was a very short period of today. You may not see that in charts, but that was a very painful period, and I got to learn about the importance of risk management and all, which helped me in a way in 2008. And I got convinced about trend and the methods, objective methods, technical analysis. So I decided to do all this in detail, and then I studied CFT. And due to that, I got to know, because the course in syllabus, only there were a lot of authors that I read, and I got to know about a lot of theories in technical analysis. And then I did CMT, and then in 2014 I wrote a research paper in MFTA. During all this, I was introduced to noiseless charts like point and figure, Renko, line break chart, and I found them very interesting. I did a lot of work in them, and I created a software, and that was another journey that I found DefineEdge, and there we created this software, uh, initially, which was created for my own personal thing and for my clients. But then when I presented the subject in various conferences, people started asking for it, and they found all those discussions very interesting. So we started distributing the software as well. So that was one journey. And then in that, we created like TradePoint and Obstra. These are the products that we have created. And with that, because I used to write a blog on point and figure, whatever I was studying. But I'm sure, I mean, the awareness was not much. People did not know much about that subject. Even today, I mean, not many people are aware. But yeah, then I wrote a book on that subject in 2017. And then I think a lot of people have appreciated that book. It is all my books are available on Amazon. They found it very interesting. Then I wrote a book on Renko. In my knowledge, that is the only book available in Renko charts in the world, which is totally on Renko chart. There is one portion in there, in a fantastic book by Steve Nisson, Beyond Candlestick. There he has covered the Renko chart, line break charts, but there's one chapter on that in that book. Then I wrote in the lockdown. I got opportunity to write. There was time, so I wrote on relative strength and breadth, which I've been practicing, and I'm a great fan of those theories. And then in the second lockdown, I wrote a book on trade psychology, you, me, and trading. And yeah, so all this that has been a journey so far.
That's really great, Prashant. So, Prashant, let's do one thing. You start a monologue around today's topic, and once you
Okay,
stop, then we move on to specific questions.
sure. So the topic, see, it's a very important thing about whether one is a any for any type of trader or investor. Uh, you know, if you are practicing technical analysis or any other method of analysis, the most important thing is exiting the trade, right? And it is, I think, something everybody knows it. Every trader would know that it is important that how I exit the trade. But somewhere I feel that they don't spend enough time in understanding the importance and the problems related to execution of the methods that they practice. Because even if you take an example of a very simple chart analysis, like very simple indicators and price patterns, even that will work. Over a time, even one can execute it in a better way. Although I feel that in any method that you practice, conviction is the most important thing. And for conviction, you have to work. And everyone will have the personality is different, the experiences are different, the way they think, the style and preferences are different. So accordingly, they have to, there must be, accordingly, they have to work on the methods. There must be some tweaks. There must be some element of you in whatever you do. That is, I have realized over a period of time, and that's a very important thing. And that is the reason, even if a most successful trader sits besides you and he is doing something, you will not be able to copy him, or you will not be able to replicate his success, simply because you are different. And that is one part that some every trader needs to know, that he will have to work on his setups, his methods. First of all, he must have a method. The random trading will take you nowhere, and that conviction is important. Then whenever, if you are practicing charts, it could be an objective method, it could be a subjective method. Subjective as in, you are doing some chart analysis, you are doing data analysis, you are studying companies, businesses, and then you are taking your decision. Fine, that is your subjective analysis. uh, that But there has to be some kind of process and some kind of method which you follow, and based on that, when you trade or when you invest, maybe you may be a short term trader, a momentum trader, or a long term trader, whatever it is. The second most important thing is the exit, because the profit or loss that you make depends on the exit. Because even if you get something at the uh, you know at the bottom, or kind of at a low price, and what will determine your profit or loss is when you exit. And this is a very important thing, because most of the people feel that I exit early. At times people feel that, okay, मेरे बेचने के बाद ही ऊपर जाता है. At times they are greedy, they don't be able to exit at the right time. Right time is something which nobody knows, but they feel that they don't exit at the right time, and all this. So this, and now when we say exit, it is also part of the technique that they follow. For example, you are doing some chart analysis and you are taking decision based on, let's say, some indicator, let's say a moving average. You enter above moving average. What will be your exit? Let's say exit is if it goes below moving average. Yeah, so here your exit is kind of defined. So there are let's say three cases when we talk about exits. Number one, you don't really know that how to exit. You don't know how do I actually exit, because when we say indicators or trend following indicator, it involves sitting in the profit, which is a very difficult thing to actually do practically, to do it. So first problem is you don't know how to exit. Second problem is you know how to exit, or there is a technique that that how to exit, but you are not being able to execute. In the So you think that there are problems related to discipline and all, but there are some other aspects to it which I'll explain. And a third case is you are not really, I mean, but you are not being able to, you don't have a single way or criteria of exit. It depends on your judgment. It depends on your gut feeling or whatever. I mean, or mix and match. So at times you look at this, at times you look at that. So majority of people who know technical analysis falls in this second and third category. They are like they don't be able to stick to one method of exit. They're always kind of struggling. And the beginners are like in first category, they don't know how to exit. So in any of this, there are one or two things that every trader needs to know, that knowingly or unknowingly you are following one approach while exiting. Whenever, in whichever method you are following, you are actually adopting one approach. And that approach is that you have to in your trading performance, there are two important criteria. One is your hit ratio. I mean, let's say you take 10 trades. How many trades were profitable? That is hit ratio. It's a very simple thing, right? So let's say your 5 out of trades, 10 trades were profitable, your hit ratio is 50%. So that is one aspect. And second is, now see, the hit ratio is like, whenever somebody is talking, they say my hit ratio is, let's say, 70%. So people get attracted. Actually, though, people sell like, 80-90% hit ratio and all. Number one, uh, a higher hit ratio doesn't mean a setup is profitable. You have to understand that. Because, and number two, any strategy can be converted into a higher hit ratio. So why high hit ratio doesn't mean you will make money? Simply because it depends on the how much profit you make when the trades are in favor, and how much losses you will book when trades are not in your favor. So if 50% is a hit ratio, it depends how much you're making in that 50% it trades with those who are profitable. So that equation is known as risk reward ratio. So some people call it payoff ratio, some call it profit factor. So there are uh, different names to it, but let's call it risk reward ratio. So risk to reward. For example, you are booking a 10-point loss in the losses you made, and you get 20 points in the profitable trades. So that will that is a risk reward ratio of 1:2. So for example, your hit ratio is 50%. You make 20 points in those 50% trades. Let's say you took 10 trades, so your 5 trades are profitable. You made 20 points, so you total made your total profit is 100 points, and you lost 10 points in remaining trades, so your loss was 50 points. You're still net 50 points plus. So in that case, you're making money, and that is a risk reward ratio. Now this success ratio or hit ratio and risk reward ratio has got inverse relationship. If you and that, I mean, many people don't actually realize this while trading. Even if you trade if you analyze your past trade performance, let's just take any random period, let's take it of last 1 month, and just see what is your hit ratio, how many trades are profitable, and then look at risk reward ratio. You will always realize, see, if your hit ratio is high, you will have to compromise on risk reward ratio. If your risk ratio is high, you'll have to compromise on your hit ratio. And just to explain it in very simple way, let's say you're taking let me take a very simple case of let's say moving average crossover. Now you are buying when price goes above moving average. If you exit very early in whenever price is in favor, you just exit very early, your hit ratio will be very high. You'll book profits in 70-80% of time, but you'll not really make much money, right? And the loss can be high because the moving average distance is kind of higher than the profits that you will make. So in this case, the trading activity will be more. There will be a lot of trades, but the actual profit that you generate is not that significant. But yeah, for this approach is favorable to people who are kind of very aggressive traders, very short-term traders. They can put a lot of trades, and so there is a law of large number. You have executed a lot of trades, and in you make some kind of money because of high number of trades. The another approach is your risk reward ratio is high. You sit in the profit, and your profits that you make are much higher than the losses you book, and that way you make money in the market. Here, this approach is actually required in investing. It is required in kind of positional trading and in trading in general, because even if you look at or study the portfolio of successful investors, you will realize that hit ratio is very moderate, at times 25% or 30%, and but still they have made a lot of money because the profitable trades, they've made higher profit in those profitable trades, and they exited early in the losing trade. So that way this equation will favor. So first of all, you need to know that there is an inverse relationship, and whichever method of exit you are following, you are actually adopting one of these approaches. Either you are exiting early, or your hit ratio is higher, or your RR is risk reward ratio is higher. Somewhere, I mean, that will fit in the criteria. Because your exit criteria is not really because you don't really know much about it, or you haven't thought about all this. So it is possible that your outcome is kind of random, but you'll still realize that RR is a basic problem. Now, if you want to address RR, let's say you want to improve risk reward ratio of your trades, then you will have to sit in the profit, because you need more profits than the risk you are taking. And to achieve that, you will have to sit in the profit more, and for that you will have to ride the trend, which is, it is very easy to see in the chart. I mean, chart देख के बहुत अच्छा लगता है कि I could have I could have bought here and I could have sold there, and I could have made this profit, but it is practically extremely difficult. And so-called professional traders can do it, but it's a difficult thing. Of course, it needs practice and conviction. Over a period of time you can achieve that, but that by doing that only you can actually increase your profit. And if you look at the beginners or the most of the traders, what is the general problem is they sit in the loss. They are very comfortable because there is always a hope that it will bounce back, and that way they sit in the losing trades, and they exit the profitable trades early. And so most of the times we see that markets recover, but portfolios don't, because they are sticking to that losing trades, which and they don't easily recover. So actually the exactly opposite is required for successful. This is mathematical. As we know, trading is about probability. This is the mathematics of trading, that if you want to actually generate higher risk reward ratio, so one, you have to sit in the profit. Second, you have to cut your losses early, and both these things needs discipline. Now, when I say early, doesn't mean, because there is one more issue with exiting very early, because I have also seen that portfolios are in trouble because of lots of small losses. The accumulation of small losses because they exited early, that also creates a problem. So it has to be, kind of, you have to, low risk or tight stop loss is important, but you have to understand that there has to be that you have to see that your technical validation is in place, and the stop is not too tight. So that way you have to cut your losses early, but as a trader, your job is to manage your risk. You have to cut loss early, and then you have to ride that trend. That technique must be in place to achieve that risk reward ratio. Now, here, even if you understand that, in a way, there are two things that we have discussed so far, that you are actually adopting one approach. There is an inverse relationship between hit ratio and risk reward, and you need to, if you understand that, you have to follow one approach, and that approach has to be there in the whichever method of exit you're following. Now, after this, there are two issues. One is, when you're looking at, for any trader, particularly someone who is practicing technical analysis, there is always a dilemma. When there is a breakout, you also look at resistance at the left, or there is some kind of, you think that yahan pe now market is very exhausted, now yahan pe there will be a top. So there is something called as a double top pattern in general in candlestick charts. When you see double top, first of all, I mean, when the price approaches previous top, a lot of people call it double top. First of all, technically it is not a double top pattern. Double top pattern is when price goes below the lowest point between two tops, right? So now when we talk about double top, let's say price is approaching the previous top, it's a double top pattern, which is a bearish pattern, but actually it is a strong trend as well. And if price goes above previous high, it will be a breakout. And maybe your another strategy or any other indicator is telling me that market is in uptrend. Now now there is a confusion. Should I look at double top? Should I look at previous resistance, or should I look at this breakout or this trend? So there is a confusion, and this kind of confusion will always. So if you use multiple studies, some indicator will show you negative divergence, another will show you that trend is up, and so on. And then you can do a lot of chart analysis and arrive at one decision, but usually all this dilemma results in there is you are not sure whether you want to actually enter, and if you're there in the trade, should you exit or should you wait. So because of all this, your exit method is, you're always struggling with that. So actually, as a trader, you have to accept that you can't be in every party. You must accept some downside associated with the any method of exit that you follow. For example, you are following one method, or let's say moving average as an exit. You have to accept first of all that it is a kind of a lagging indicator. It will give you little late exit, but you will, the advantage is you will be there in the trade. I've given moving average just as an example. It is about any trend following strategy, but you have to accept that there is always some kind of downside in the method of exit that you're going to follow, and you have to accept that. This acceptance, or the problem of not understanding this and not accepting, is really causing that one is not being able to stick to the method of exit. And once you have understood this, then you need to know that you need to follow one approach. If you're not very comfortable,
We
if you're not.
lost. Okay. Yeah,
Hello.
please go ahead. Go ahead. Go ahead. We lost you for last 10, 15 seconds. So if you have said something, so you can repeat for that period. Yeah.
Okay, so last 10, 15. So basically, I was saying that if you now when you understand this, that when you need to know about success ratio and risk reward, you need to follow one approach. And second is, you must know about the downside of the exit that you're following, and you must accept that downside. If you understand these two things, then there will be some kind of clarity in the method that you are adopting to exit the trade. And this clarity is extremely important for the successful execution of your strategy, for actually achieving the success in the business of trading and investing. And and because you know that you cannot be in every it's not possible that you'll trade all breakouts, you'll always be able to catch all reversals. You'll be exiting ahead before the market reverses. So all this is not possible. You have to understand, you need to know that how your system will be able to react in different situation. If market suddenly changes the trend tomorrow, are you really prepared? And there it is important that how will you exit it. So once you have actually understood that there is it is important to have a very clear and defined exit criteria, and then you need to know about this approach. Now for the people or those who are beginners, it is not very easy to ride the trend. At the same time, it is not very it is like when somebody is following the approach of higher success ratio, because it's not very comfortable in riding the trend. In that case, the overall profitability will be less, but it is still doable as long as you know that in the losing trades will be less, but the losses that you will make in those trades will be high. So if you know your business or what you are doing, then you'll be able to deal with it. But to the middle approach could be that as a beginner, you can actually have, first of all, you have to have a very no, your initial risk should be defined, and you should exit your trade as soon as your stop loss is gets triggered, and you should be out. So your business as a trader is you should manage risk. Second, you may not be able to ride the trend, but at least try to ensure that you're booking profit, and the portion of profits that you book is higher than the losses that you have you're booking. It should be 1:1.5 or 1:2 at least to begin with. And that way, gradually you can practice to sit in the profitable trades and ride the trend. So this is the principle, and then this has to be translated into the method that you're following. It could be a method of technical analysis. If you're following some kind of fundamental or other methods where you'll be sitting in the trade. See, unless you are investing for your grandchildren, you are a trader. You could be a long-term trader, but if you want to exit, let's say after 1 year, 2 year, 3 year down the line, you are a trader. And the period is something which I find, it's not really, there is a definition in books that I've read that if you invest for 1 year, you are a long term trader. If you invest for more than a 1 year, you are a long term trader, and so on. It's really actually it doesn't make any sense, because markets doesn't perform based on your time period requirement. Because if you want your funds after 1 or 2 years, or if it is your tax related requirement, market doesn't understand all that. So it could turn out to be 2008 if you invest for 1 year, or it can be 2022. So it all depends on market trends. So time, actually, I don't think time makes any sense, but you must have some kind of long term exit criteria, which doesn't occur frequently, but you should have some kind of exit method in place, even if you are a long term trader. And that way, for your portfolio, if you have something like this, wherein the exit criteria is kind of defined, and you understand this aspect, that there's an inverse relationship between these two, and you have to follow one approach. And yeah, this is what I wanted to tell. And personally, my favorite approach is, I look at relative strength and breadth apart from price. And they are my favorite approaches when I look at exits apart from price. In fact, it also helps in market regime analysis. So that is I look at, that is what I those subjects, the techniques I look at. uh, yeah, so this is what I wanted to actually explain about exit. And maybe we can I'll discuss more, but let's see if people have actually I've been able to explain it, and if there are any questions.
Right, Prashant. So, Prashant, let's start with a very basic question, in the sense like, when people start, right, they are
Hmm.
clueless, be it trading, investing, or whatever it be, right? So,
Hmm.
what would be your suggestion? Like, obviously, we experience cycles, and over a period of time, we learn things, and like we form our method or a strategy. But
Hmm.
again, in line with your experience, what would be your suggestion to those who are just beginning, or maybe they're in the market from last year, or maybe not later than the COVID period? So,
Hmm.
how they should, refine their process and work on the methods and strategies so as to be good at whatever they are doing?
Hmm. So first of all, they should understand that there has to be some kind of process or method if they want to trade or invest, whatever they are doing. They may be trading intraday, or they may be short term traders, or a positional trader, whatever they are doing. There has to be a method or process in place that they must understand. And if you look around, if you look at the people who are actually doing good, you'll find that they are kind of method. They kind of follow methods. They are, disciplined traders. And I'm talking about people who are actually doing good, not just because the way people advertise, or there are some wrong ways of selling products. So it's not about that, but people who are actually doing good. And I have seen and interacted with a lot of traders over a time, and I have seen what they do. And I can definitely say that people who do good, they follow some kind of process. So first, they must understand the importance of process. And second, at least this should start. There could be some very basic things about trading. It's not in the technical analysis. If they understand, there are very simple and basic stuff that they can learn and practice. I i also would like to add here that several things are very easy to say. I mean, there is a lot of gyan available on social media nowadays, so everybody knows about all this. They should put a stop loss. There should be they should ride a trend and all that. But execution is a very difficult task. It's not that easy. It will come with practice. But at least if they know that I have to achieve this, I have to become a disciplined trader, I need to be very disciplined, and I must have a process. At least they will start somewhere. And it is much better than a random trading, or listening to people. And I mean, the random trading, the process is much better than the random trading. At least that conviction has to come to begin.
Right, agree. So,
Yeah.
Prashant, like, you talked about technical and indicators. So if
Yeah.
specifically I ask about you, so what do you prefer and what had been if I talk
Yeah.
about you, so what indicator is which has helped you big time so as to identifying the trends, and as you rightly said, it is all about like hit ratio and how big you make when your trade is right.
Yes.
So
Yes.
which way you do it for you, so that would be helpful for our attendees to understand.
So, see, when if I talk about my personal trading journey, or the way I have learned the things, because I have also gone through this beginner cycle, but actually I quickly understood that there is an importance of objective trading process. See, today it is very, these are very common things, like, people also know about algo tradings and all this, but I'm talking about 2006 7, when people these were not very popular things. But I understood that the objectivity is very important aspect of trading, because even if you know many things, see, I know personally know a lot of brilliant analysts, some people who are actually very good in chart analysis, and they know lots of, they have brilliant information, they know lots of things, they do a lot of data analysis and all that, but they are not uh, good in execution, simply because they know too many things. And it's like, call it analysis paralysis. You have so many things, you don't be able to actually execute, because you'll always be in dilemma, because for example, there you are seeing breakout, you also see resistance at the left, or you are looking at negative divergence, you'll always be confused. So I realized this, that for the better execution, there has to be some kind of objectivity on trading. Your decisions should be more of a rule based. And so there, I came across, like I said, noiseless charts, and I found them very interesting. So I have worked a lot of them, I've done a lot of things on them, I've written books on them. So I practice noiseless charts, because there is an objectivity in those charts. My chart setups are very defined and objective in nature, and I have been practicing relative strength and breadth. So relative strength is like, you understand which sector, which segment is outperforming. For example, if we talk about the current scenario, like so I look at how high, my approach is more of a top down. So I look at what Nifty is doing versus, let's say, gold, or USD INR, or bonds. So the asset class analysis, if Nifty is outperforming these asset classes, then the activity should be there in the equities. And then in equities, which segment is doing good, let's say mid cap or small cap, or frontline, or micro cap, which segment is doing better. So for that, this relative strength analysis actually helps you to know in which segment you should be active, and in which sector or the subsector. So I do a lot of the sector and subsector analysis. So which sector is doing good, and what is the formation in RS. And most of this is objective. I mean, so the first thing is, you should know that what is happening in Nifty, the strength of the Nifty, then which sector or which segment is showing strength, where is the pattern of kind of outperformance. And once you identify that space, then in which stocks are contributing. And here there is a very important observation that I would like to share. See, in any segment, when something is performing, let's say there is a rally in, let's say, pharma sector. In the pharma sector, if there is a strong uptrend, you will see some kind of, there is a uptrend, there are 3 or 4 legs in that uptrend. In each leg, whenever that leg is, you see there is a outperformance, you see there is a breakout. If you identify the leaders of that leg, generally the leaders continue to outperform in that leg. And I try to kind of find those leaders. And so that way my technique revolves around RS, and then I look at the price patterns of that, in that the stocks of that sector. So generally I follow this approach. And for exiting, because it depends on, of course, there is a chart setup. So I look at these price patterns, and all price patterns have a predefined stop loss, and that I follow. I mean, there is no two ways about. I don't even remember last time when I had a trade which and the stop loss was not in the system. So that's kind of that came much before in nature itself, that there cannot be a trade without a stop loss. And then the job is to sit in the trade until that stop gets triggered. And for exiting, there is one more indicator that I follow, that is breadth indicator. And breadth is like how many stocks are participating in one segment. So the breadth is not for the stock, it is always calculated on the index or the sector or the segment. So if more stocks are contributing, the breadth will increase. And if that breadth is in a very extreme overbought zone, so there are two phases of breadth. I'll not make it too technical because we'll need a separate session on the breadth indicator. But there are two segments. When there is a strong trend, in that case the breadth have a different setups. And when there is a normal market, which is there 80-90% of time, then the breadth is a very breadth works like a charm. So that way I follow these setups, and most of my setups are on this noiseless charts and RS breadth. So I use the combination of these.
So Prashant, say if you identify some sector, and so you stay with the leaders of the sectors, or at times also try the approach of basket because the sector as a whole is doing good.
Yeah, so this is a good question. I'll explain here. As I explained earlier, there is always a dilemma, right? Because if there is a breakout, for example, right now there's a strong breakout, everything is doing good, then you may have some kind of resistance. You may look at resistances or divergences. You also feel that there is an exhaustion, there is a reversal. I'm giving just an example. Now, if you feel something like this, and if you find a trade which is at the resistance, and you think that the risk reward ratio is good for the bearish trade here, so it is kind of contra trade, or you can also call it a mean reversion trade. Now, what is the scenario here? You have a setup which is bullish, and everything is good here. Ideally, you should be trading bullish breakout strategies when the market is strong, when the trend is strong, there's a strong momentum, the markets are outperforming. You should be actually trading bullish strategies. Now, if you're not very comfortable in bullish trades, and if you want to trade contra trades, you should first of all know that you are taking contra trade. Right? You should know that you are taking mean reversion trade. This is point number one. Point number two is your allocation should not be, you should have limited allocation to the mean reversion trade. This is the approach that I always, this is what I follow, though I'm not very comfortable in mean reversion trades, but even if I take, it should be like, not more than 20% of a total portfolio. That 20% can have the market suddenly reverse from here. And, there is always, I have seen, because I've been interacting with traders, I've seen that some people are not very comfortable in breakouts. They always feel that, yeah, top main lagaunga, I'll sit at the top. So I don't want to buy here. And so they are always, kind of looking for reversal. If market is going up, they're like kind of finding tops, and if market is falling, they're finding bottoms. So to deal with that, you can have mean reversion traders. So mean reversion trading setup is also a good systematic trading approach. A lot of people practice it. It's okay. But if, let's say, about if I talk about my preference, I am more of a trend follower, or I'll trade in the direction of the a general trend when there is a strong momentum. In that case, even if I take mean reversion trade, I should know that I'm taking mean reversion, and it should be not more than 20% of the portfolio. So that way, you at least know that what you're doing. And if you are a pure breakout trader, if you don't want to take mean reversion trader, simply a breakout trader, you should know what is the downside of it. The downside is that you will not be able to actually catch the reversal, and you will have to give away some profit, and you must accept it. That acceptance is very important. At times, you should know that I cannot, because the good side of it is you will remain in the trade as long as it is going up, and you don't know kitna chalega. So in that case, it is, see, this is the sign of maturity, and this is the sign of a professional trading. You know that there is a downside of what you're doing, and you have accepted it. This is extremely important. And generally, the problem is we don't want the pain, and trying to avoid pain results in more pain. That is a general, that is generally what happens. So I don't want to, I want to catch reversals also early. I don't want to give away my profits. So if I want to be in every party, so that way I get into trouble. So the idea is, you must know that which approach you're following, and you have to accept the downside of it. So if I talk about my case, I'm more of a breakout, or I look at the what is happening. See, uh, um, uh, I was interacting with someone, and the important discussion was, whatever you do, you should actually know what is happening in the market. Market का रुख सही से समझना बहुत जरूरी है, and that context is very important, which actually in my case I get from the RS and thread. I simply don't look at price. I also look at what is happening across the market. For example, if I talk about the current markets, if or recently what has happened after March, I think 31st March, the bottom we saw in the resistance chart of mid cap, small cap, micro cap, when all your segments are doing good, this is a kind of euphoria. It's a strong trend. It's a strong momentum, and in that, and what is happening even right now. So in these kind of trends, there is no point even if you're looking at the breakouts in large cap stocks. I mean, your simple thing as a trader you should do is trade simple breakout strategies in this segment. So if you understand what is happening in the different segments, you can define your strategies accordingly. And then you know that if I simply keep trading the breakouts, there will be the final leg of reversal which I will not be able to capture, and I will have to give away some profits, and you have to accept it. So this is what I mean, this is how you should think as a trader, I think.
So, Prashant, what would be your suggestion on cutting down the decision points, and how had been your experience on this on personal level?
Cutting down decisions. So basically, first of all, as a beginner, particularly, what happens is you have lot of checks in your whatever you do. I mean, for example, people apply a lot of tools and indicators on the chart, or they do a lot of things, and in the process they don't actually know what they're doing. They are following something today, tomorrow they'll come across some different setup. Someone will post some strategy on social media, and they'll start following it. So they keep turning struggling and shifting from one strategy to another, and that cycle never ends. And in the process, what happens is, if you trade one system, there is a difficult period. You of course you don't. Every strategy is a two stop loss strategy. I would say. I mean, those stop loss bach gaya and you are out. You will not be able to sustain. You will not be able to trade that strategy. If there is a difficult period, you shift to another strategy. There is a difficult period, you shift to another strategy. In the process, you trade difficult periods of multiple strategies. So first of all, you need to understand that there is no holy grail. There is no strategy which will give you consistent profits, and strategy is just one part of overall trading system, or what you should do overall. I mean, there's a position sizing, there's a risk management, you have to understand the importance of all this. And to begin with, just do one thing: have a very small amount in your portfolio. Decide on one strategy or one method which you have understood. You learn a lot of things nowadays on social media. Just take one approach and execute at least let's say 25 trades of that strategy without deviating. So it's not you're not doing it to see whether that strategy is profitable or not. You're doing it just to see whether you can learn that discipline. Can you be that disciplined enough that you will not deviate? So it is more of learning the discipline, and from that perspective, you should at least take 25 trades of one strategy. If you can achieve it, then at least you will take one step ahead. You will understand how you will learn discipline, and that is the first step. Then eventually, I mean, of course, your strategy will keep evolving, and you will learn new things. But at least you know that how to execute that. Learning that execution, this is how you can begin.
Right. I think some issues with the speakers I am adding anyway. So Prashant, like previously you spoke about knowing the downside, right? And that is very
Yeah.
important when you trade. So
Yes.
what could be I mean a better method so as to work on this and like figuring out how one can limit the downside and potentially in that way limit the loss. And behavior is one aspect which is very important because you spoke that
Hmm.
cutting your losses when you have see I mean identified your downside, and if that hits, so you should
Hmm.
be out of the trade, right?
Hmm.
So
Hmm.
managing behavior on that aspect, how had been your experience and what would be your suggestion on that?
Hmm. So I remember one incident. See, we run this kind of traders nest wherein people sit and they trade. We used to run it in my office in Pune in 2018-19. We remember one incident. A trader came from, I think he was from Chennai, or so he was trading one strategy, and he had a method of putting a stop loss in the system. He knew what should be the stop loss when he take a trade, and he came in the morning. He discussed his setups with me, and he said that I'm going to put the stop loss here. How do you think this strategy is? And I said, yeah, looks okay. I mean, it is a decent strategy, and you should follow it. And he told me that he has been practicing this since last many months, and he is here to learn discipline and all. So he came in the evening, and he said these are the trades, but he couldn't exit those trades even when the stop gets triggered. So that was kind of, I said, you discussed that you know what is your method of stop loss, and then you knew what your stop loss is, then why did not you exit it? So he said, kuch bhi karo. I mean, he was not being able to put that stop loss. I mean, he can't put that F2, press that F2 when the stop gets hit. And that was a very challenging for him to exiting the trade, or the booking, not only booking the loss, even if he is riding, he is not being able to exit, because the price is falling from the top, and was not being able to execute his method. And I learned something, because I had to actually stand behind him, and I told him that press that F2 and exit that trade. And so I realized that at times it is very difficult for people to kind of book loss. And so knowing exit is one thing, learning strategy is one thing. People tell you that you should exit here, if this happens you should exit. So people have rules. Creating rules is not really a big deal. You can easily do it. You can create scanners and you can do all that, but actually execution needs kind of conviction, I would say. Of course, behavior is one thing, and there can be a lot of discussion on that. But this conviction that I must exit the trade, I must book the loss, is important. And that realization is important, that unless you book the loss, you cannot really become profitable over a period of time. Trading is about handling the losing trades. Trading is about booking the loss. It's not about booking the profit. And every time if there is the issue of how do I limit my downside, that fear, or that the focus, basically, see, this all is, the all problem comes down to one very important thing. What is your focus? The focus of majority of traders is to make money, because everybody is here to make money. And the problem really is because we are trading only to make money. And so the focus is always, what will be my return, what will be the profit. And even if let's say my positions are open today, in my mind there is my end to end, what is the profit that I see. And if suddenly I see global markets down, my mind will calculate what will be the loss if market opens at this level and all. So I call all this shadow profit or shadow loss. I've explained this in my book, You, Me and Trading. I call it shadow P&L. So this shadow P&L is something which runs in our mind. and we are always calculating that whatever is happening, we always have the shadow P&L in mind, and that is actually a real problem. And when we look at the P&L, if the focus is always on the money, uh, no, what will happen is your trades that you take, you will not be able to escape from the emotional trading. You will always be too attached to what you're doing, and that actually causes a lot of problem. In this business, perhaps in this business, it is very evident that it is an outcome driven business. So today, if I tell you that I have made profit, there is no discussion on whatever I have done. I mean, so the assumption is whatever I have done is correct. If you make a profit, if somebody tells you I have made a profit today, it's the end of discussion. Jo bhi kiya, अच्छा ही kiya, because you have actually made profit. But that's not right. This is outcome driven approach. And what happens is, for example, you did some revenge trading. You actually took more leverage, or you were actually, your position sizing was not correct. It is possible that you made profit. You did over adjustment in options. It is possible that you did profit, but that profit is not that has not come from the correct trades, and that habit will actually result in a problem over a period of time. So the approach should be, my action should be right. At times I will accept the loss because I want to become profitable over a time, right? So for any trader or any investor, he will not make profit on a daily basis. He will not make profit in every trade. You must know that there will be some kind of losing trades, there will be losing days, but I will ensure my action is right. So if the focus is on action or on the process, then outcome will automatically be right. But here the usual problem is the focus is always on a outcome, and that is the crux of all the problems related to trading.
Right, fair enough. So, Ravi, you can unmute and ask your question.
Yeah. So hi Prashant sir.
Hello.
Uh, so Prashant sir, one thing that I have noticed over few years is
Yeah.
that the expectations from equity markets are very high compared to other businesses.
Mm-hmm.
Like I'm into sales. I have distributors. Anything better than any ROI greater than 18% is very good for any distributor, and that's what we discuss with them. And
Mm-hmm.
they're ready to invest more once their ROI is more than 18%.
Hmm.
But when I interact with anybody for equity markets, 100% is the minimum that they want in 1 year.
Okay.
So,
Yeah.
and I think that this is a big problem. And apart from that, the kind of demats account are getting opened, and people's
Mm-hmm.
interest in options. I think this is very alarming that people should understand the importance of the expectations, because expectations lead to the mistakes that I think we as retail traders do most of the time, and then we blame.
Mm-hmm.
So what is your take on this, and what is your
Hmm.
suggestion to the retail traders to overcome this expectation thing from the markets?
Yeah, so very rightly said. Yeah, expectation is a problem, because usually it is understood as it is a high risk, high return business. So you take higher risk and you can expect high returns. So usually what happens is the expectation is on the return side. They don't understand the risk side of it. So you also should know that there is a high risk. One. Second, actually, if you have a fair expectation from the market will always surprise you in a way, because if you have a fair expectation, your decisions will be mostly kind of fair. You will not do uh, the mistakes that people do, and all those mistakes are related to the expectations that you rightly said. And expectations, because they are high, the most of the trades decisions are emotional in nature, and so that results in a problem overall. So you must understand that your expectation should be fair, and you should focus on the action or what you're doing. Like you said, that people are trading in options. Trading in options not a problem. The way you trade is a problem, and that way you trade, whether you're trading options, you are trading options because you know that in the less capital you can achieve much more returns. and that's not really right, because you must understand the option as an instrument, how that behaves. And even if you're trading, for example, if you're trading strategy, then what should be your position sizing and the allocation and all that. So you must understand the business overall, the mathematical side of it. And by if you have that risk in control, if you have a focus on the process, and if your expectations are fair, it is possible that market will reward you in a much better, much more than what you actually expected.
Right. So thanks a lot.
Oh, thanks.
So Himanshu, you can ask your question. Okay, he got dropped. Okay, he's there. Yeah, Himanshu, you can go ahead, please.
Yeah, hello.
Yeah,
Yes,
go ahead,
Manoj.
please.
Yeah, my question is I want to ask, uh, like market is in trading. Uh, Sorry, I am audible.
Hmm. Yes, yes.
Yeah, I am asking. Right now, market is trading around at a VIX of 10 or 10.5. How to
Hmm.
how to deal with it? Because I am seeing like I am seeing that triangle range
Hmm.
of next expiry 6 July.
Hmm.
19300 call is trading around 9 or 8 rupees, and 18600 put is trading around 12 or 13 rupees. How to trade with
Hmm.
such low premiums in a triangle? If you are playing overnight or in intraday, it is manageable, but one single shot
Hmm.
gap down uh, will be poison hazardous position. Are you getting my point? What I want to ask you?
Yes, I understand what you're asking.
So,
So
will you
yeah.
tell us something about it?
Hmm. Sure. So first, though, I mean, the topic is different today, so I'll not be able to. I'll not explain it in detail, but this is one general issue. The actual problem here is the VIX that you're looking at. It is something which you haven't actually observed in the recent history. Now, here, what my experience is, because I have backtested a lot of things, not only Indian markets, I have seen international markets, I've done a lot of things. I mean, in a way, backtesting is kind of my hobby. I try to, and I don't do it to. Uh, just see the performance of the strategy. I do it to analyze the behavior of the instruments or the markets in general. So my observation has been that a one strategy which has, let's say, which has performed over 2 3 years will have a different payoff over next few years. So market behavior changes over a period of time, and there are always surprises. This I have seen, something which nobody would have expected, and that keeps on happening, because maybe because a lot of people adopt one approach, and then market changes, the behavior changes, the nature, markets are dynamic, uh, things keep evolving. So this low VIX you may not have experienced, but at least you know that in this scenario what you shouldn't do. Selling option will always be, can be a problematic in this scenario. Maybe you should look for spreads or calendar spreads or something like that. I mean, that discussion is altogether a different thing. Maybe we can do it some other time. But in general, you should know that there will be surprises, and and how to deal with those surprises. Now, if and there is one more angle. Just this was answer to a question that if there is a low VIX scenario, you shouldn't be selling strangles in that case. At least you know that. And second thing is, if you'll ask me personally, when your in general markets are doing good, when your mid caps are strong breakout in RS and they are outperforming, actually your money should be parked in the simple breakout or trend following in the mid caps and stocks. The returns will be much better than, maybe you have some kind of book or portfolio which is trading nifty or large cap, but your major allocation should be in this segment, in this kind of scenario.
Does that answer your question, Himanshu? And as rightly
Yeah, yeah,
said by
yeah, yeah,
Prashant,
yeah.
like,
I got the answer. And last question is my from Prashant sir is that you the topic is about investing. Like right now, market gave a breakout around VIX of 10 and 10.5. Should I buy, should I invest some capital in some stocks or diversify in some stocks at this, because it is at the lowest, VIX is at lowest. So investing at these levels, some of my capital will be good or not, according to Prashant sir or whoever who.
Yeah.
Yeah, yeah.
See, you should invest in the stocks not because VIX is at the lowest. You should invest in the stocks if you have some kind of method or strategy to do it. Simply because if I tell you to invest today, how will you exit? I am not there to guide you exit tomorrow, right? You must have a method to do it. My idea is, I've explained about RS also. If you learn this kind of method, or if you know that which segment is doing good, your capital should be allocated to accordingly, according to market situation. That was my point. And so if you're seeing that something is not working on one setup and market is favoring some other setup, then your money should be parked there. That's my point. You should do it based on some kind of method where you have concrete process and exit in place, which is basically a topic of what I've been talking about. So that should be in place if you want to do it.
All right. So Anubhav, go next, and then Prashad and Limesh. So Anubhav, you can ask your question, please.
Hello, sir. Good evening,
Good
sir.
evening.
So what I find is that if we uh, completely rely on technical analysis, what
Hmm.
I find difficult is asset allocation or
Hmm.
position sizing. So how do you define your, how do you understand how much to allocate into a particular stock, or do you use fundamental analysis for your judgment? And so one more point is that
Hmm.
how much importance do you give in quants?
Hmm.
Do you use any sort of data analysis and all?
Okay. So, see, I've done all of this, and whether I mean how what I do is can be a personal preference. Also, maybe you may not be able to do it completely, but I have done all this, and maybe you can more than quant. Your setup should have objectivity. Basically, a lot of people call certain thing quant, but they are nothing but the rule-based trading setups that you can actually follow on technical analysis. So keep it simple, keep it the way you can actually execute. Number one. Number two is funda techno approach is good, but that fundamental, if you can understand the fundamentals, now it is a subjective thing, right? You must understand the business. If you have some kind of understanding of how to read the business and the kind of understanding the balance sheet, the management quality, and all that, that will give you some kind of confidence in investment. So you can, of course, do that. What I do for asset allocation, I do a lot of RS analysis there to strength, and I look at the segments, and accordingly there is an asset allocation. For example, if the gold is outperforming Nifty, then the breakout trading strategies in gold can be executed. In that period, the gold can be traded. In normal circumstances, when Nifty is outperforming, I don't see any point in trading gold. Because it's not that because I'm not a compulsive trader in commodity. So it is better that money should be invested in the stocks which are doing good. Which stocks are doing good? Then there is analysis which whether frontline are doing look mid cap or small cap or something like that. And if that segment or that sector is doing good, and which stocks are outperforming. So allocation can be decided based on that approach I follow.
So, sir, you follow the momentum and the trade.
I
You
Yeah.
you don't you don't chase for the pessimist sort of stocks which are cheaply undervalued, something like that.
Yeah, no, I don't do that, and I wait for them to show some sign of strength, and then only they will definitely come in uh, the RS. So I mostly follow trend and momentum. And as I said earlier, it's not about me. See, because in my approach, I will have to accept that I will have to leave those that need of identifying the stocks available at cheap or low rates or finding bottoms, because I cannot do everything. As a trader, I have to accept that I will have follow one approach and I have to live another. And or maybe there can be some allocation to those trades, But I do some kind of mean reversion trading, not in investing. I try to find bottoms in the stocks which are available at low PE or bottom.
Okay, so thank you, sir.
Thanks.
Mr. Prashad, you can go next.
Prashant sir, namaskar.
Namaskar, sir.
Uh, Actually, my question is regarding your relative strength book.
Okay.
Uh, uh, Actually, this is a bull market, and
Yeah.
breadth is also neutral
Yeah.
today. Can we have a watch list of bullish eagle? This is the right time to watch bullish eagle pattern.
So nice to know that you know about bullish legal and you are asking me about breadth neutral. So yeah, you have read the book. Uh, so yes, the breadth is neutral and market is strong, है ना? So you can look
Yeah,
for bullish eagle and
yeah,
you can look for flyers if you understand.
yeah,
So what happens? See, I recently talked about one thing. So it's a bull market. If you know that there was a strong breakout somewhere around 17,300, and now
yeah,
we are almost close to 19,000. There was
yeah,
a small correction in between. In that
yeah,
correction, because overall market is bullish, in that correction you should look for lion patterns in RS, because the stocks or sectors those are doing good, right? Even when market is falling. Now, when market is going up, you should look for the flyers or bullish eagle patterns, those who are contributing in the market, and that way those setups are tradable.
Prashad ji, any follow up? You got your answer? Prashant ji, you are on mute.
I am on mute.
yeah.
Yes.
No, no, I was on mute.
Oh,
Thank
okay.
you,
Sorry.
thank you. I have got my answer. Thank you, thank you, thank you.
Thank you.
Thank you.
So, Limesh, you can quickly unmute and ask your question, please.
Hi, so my question was similar to Himanshu's question. I was looking for an answer, but like I couldn't get I couldn't understand a proper explanation. So
Okay.
my situation is similar to his. I
Mm-hmm.
recently exited all my portfolio
Mm-hmm.
because I needed some cash. But now I'm in a position to start investing again, and the thing is, market has just made an all-time high. So
Mm-hmm.
I'm also wary, is it the right time or is the wrong time? So also do not have a systematic approach.
Mm-hmm.
So what would be your suggestion for someone like me who wants to like follow systematic approach to investing in equities, whether it's through ETFs or through stocks or anything? And
Mm-hmm.
then what should also be my exit approach? Because like up since the last 4 years, I've been on and off investing, and the only time I've sold is when I needed the money. So I've never really had an exit approach to investing.
Mm-hmm.
So how do you like suggest I go about it?
Mm-hmm. So the first thing that you should know about the problem is you don't really have a concrete method of exiting, and if I suppose
Yeah, yeah.
there is no method of entry as well, or how to invest. I mean, you have
Yeah, there's
yeah,
no concrete method. It's
yeah,
more or less like 200 DM tuta, so I'll buy a little bit, or I'll
yeah.
buy with whatever cash I have and then just wait for it to rally and then I'll sell.
Hmm. So yeah, the problem is, I mean, of course you have exited because you needed money or all that, but you understand that market doesn't behave that way, and you needed money. That was your personal requirement, but you the reason that you exited because of that has nothing to do with the market trends. And now, if you want to start again, my recommendation will be to start learning, spend some time on learning the techniques, methods related to technicals, related to fundamentals, whatever you make sense to you, whatever you understand in a better way. Invest some time in doing that. So you will actually, first you need to understand the logic and the reasons behind those methods, and that way you will be able to build some kind of conviction in those methods. That is that if you are interested in learning all that, if not, simply invest in mutual fund, and that is the another way to participate in equities. But yeah, and I strongly feel that you should participate in equities in India, because overall things look good. But otherwise, if you are interested in taking decisions and understanding this business, then you should spend some time in understanding this kind of methods of analysis or techniques, and develop one approach It will take some time. It is a process in itself, but you have spent 4 years, on and off in doing things. At least spend some time in understanding things, read some books, and if you'll be able to develop some approach, your journey will start from there. At least you will have one process in place. Try to develop some process that will help you really in a long term.
Do you have any text
Yeah.
material or source I can read to
Hmm.
really just copy paste the process and understand the rationale behind it?
So actually, you are looking for a short term just because you
Yeah,
want to
that's
copy
true.
paste.
Yeah, yeah.
Yeah, yeah, yeah. So don't follow that first of all, and it's okay. I can understand you as a beginner. Even I would expect that kuch jaldi se de do so that I should start making money, but it will never
No, it's not about
happen like
making
that.
money. I
Yeah,
already very, very actively trade in options.
yeah,
Just that now my corpuses are such that I would also want to deploy some money into equities because I am at a good enough corpus where I can have some of my money invested. So I don't
yeah.
have to worry that part of the capital and I only handle like the cash capital that I am with.
Yeah. So if you want to understand technicals, I'm sure you must be knowing basics of it. But I still uh, recommend Martin Pring book, Technical Analysis Explained. If you can just go through it. Of course, by when I recommend, I'll be little biased because I have written books as well. So, but for understanding technicals, Martin Pring ka book is something which I recommend. There's one more book from John Murphy, and that
Yeah,
is
I've read
something.
John Murphy's book. I've read John Murphy's book, but it's
Yeah.
I've still haven't gotten like an investing approach as like so far I told you it's only been like on like the break of 200 moving average. I like buy
Mhm.
as many Nifty Bs as like my cash capital allows that time, and that's
Mhm.
about it. And like I'll exit when I feel like exiting mostly. So it's never like my like entry is okay. You can say it's slightly like um how do you call it?
Mhm.
Like it's defined, but my exits are not defined at all. So my like question was especially
Mhm.
regarding the exit that
Mhm.
like investing, when should a person exit, especially like let's say someone who's like me.
So, I mean, it's not very, there is no right or wrong answer of how to exit. There can be so many approaches. It depends on what is your entry, because the exit also depends on how you're entering and what is your approach. You're looking for a positional or momentum trader. And there are so many ways. Like you gave an example of 200 average. It could also be an exit method of exit. Just that you will feel that वो बहुत दूर हो जाएगा. I mean, 200 day, it will be a delayed method of exiting. So there are so many things. I would recommend if you can spend some time in understanding relative strength, because I have been practicing it, breadth and relative strength. Maybe you can see my book, which is available on Amazon. You will understand the basics of it. And of course, the right from the basics, everything related to RS and breadth, you will be able to understand. But this is something which I have a lot of conviction in. So I'll be a little biased towards it. But
Okay,
uh,
that's okay.
that is something which I found best when it comes to exiting.
Okay, cool,
Thanks,
cool.
thanks,
Yeah.
Limesh. So next question is from learner investor, and probably the next and the last question from this. So yeah, learner, please unmute and ask your question. Learner, we cannot hear you. Are you there? I think it's so. Prashant,
Yeah.
before we close, I would appreciate if you tell our attendees a little bit about Define Edge, and then probably any concluding remarks from your end.
Okay. So DefineEdge is also it's a securities also, and it's a fintech company also. So we have developed platforms for technical analysis, technical screeners, and fundamental screeners, mutual fund analysis, mutual fund screeners, alerts based on technical setups and strategies. And in the charts, we have in-depth charts for noiseless charts, point and figure, Renko, line break, red to strength, breadth, and a lot of studies which are available in our platform. There is a complete platform for option strategies. Opstra is a very popular platform a lot of people use. And we have now securities. We recently launched it. All these platforms are available for free if you simply have a demat account. we have followed this approach so that we can make all these platforms and all these tools available for free to as many people. And we have taken this approach, and that way you have NSE, BSE, FNO, CDS, MCX, all these markets in real time, options charts. All my books are available for free if you simply have this account. And there's a lot of videos, we have educational videos. We have a platform called Insight for that. There's a lot of things available. It's a complete universe in a way for all types of traders and investors that we have created in DefineEdge. And we do a lot of work on education as well. So that is one. And yeah, in general, see, today my idea was to discuss some important aspects related to trading and investing. This exiting is something which, the importance is something which a lot of people don't understand. And I just thought that there is one approach which everybody takes in whichever method of exit they are following, and some people don't really know about it, so they haven't spent enough time in understanding it. So that was my idea, just to discuss all this, because these are the right things which should be discussed. And I would recommend that, if you have forum, if you have people, if you have trading buddies, discuss these subjects, and you'll get a lot of insights. And that was it. And Prince, first of all, I mean, this is thank you very much for having me on this in your podcast, in this space. You are doing some wonderful things. I've seen your few episodes that you have been conducting all this, and doing, sharing knowledge with people, and asking experienced people to share their knowledge so that everybody can get benefited. I hope whatever we have discussed will benefit everyone in some way.
Thank you so much, Prashant. It was great to have
Thank
you
you.
today, and lots to learn. And for our attendees, like those who joined late, the session is recorded. And in the meantime, I'll upload it over my YouTube channel that goes by the name of Accidental Investor Prince. So I would appreciate if you are yet to check that channel, please have a look. And surely, if you are interested in capital markets, so you'll find everything under the sun on that one channel. Over 130 plus podcasts with different market titans, just like Prashant shared his knowledge today. So I would appreciate if you connect with us. That gives us the motivation. And Prashant, it was really kind of you to agree doing this, and it was really the most important aspect of investment is exit. In fact, so I'll also like
Yeah.
go through it once again, and surely it is a great value addition to everyone around. So
Thank you. Thank you,
with this,
Prince.
I
Yeah.
take everybody's leave, and thank you so much. Good night. Take care.